Well, it's Friday. I don't have any options that are going to expire. If you sign up to my Patreon, you can get my thoughts before, during, but most likely after I make those trades. So I exited my 185 call that expired on June 2nd and immediately adopted a 207.50 put option that expires June 9th. We'll see how that pans out. I'm actually hoping I don't make any money off of that due to the long-term calls that I already have. But I have a sinking suspicion that Tesla will have a pullback within the next 2 weeks, so I'm going to act on that. Hopefully I'm wrong, but if I'm not, make a little bread in the meantime, right? So the 207.50 put is the only thing I have out in the short term. With Tesla over their 200-day moving average, I'm not as confident making puts right now. It's a very strong indicator that they may soar, but there is some resistance at the 210 level. They break through that, could easily see 220 within the next couple of weeks. Who knows what the market's going to do? As I record this, Tesla's up a little over 2% at 208.79. Right now, my put is looking dumb. I have a feeling Tesla will push up against the 210 resistance level on Friday. I probably should have been a little bit patient, but 260% returns, you really can't argue. Can't go broke taking a profit, but the stock is soaring high, as we can see. Over the past week, up 13%. Over the past month, up 27%. And over the past 3 months, a little more flat, almost up 1.5%. And over the past year, we are still down 17%. And for those glorious individuals that were invested in the company over 5 years ago, up over 1,000%. Now I believe sooner rather than later, Tesla will achieve their 1 trillion market cap. My aspirations are that they hit that before December. But I have a sneaking suspicion over the next few quarters, Tesla will drop some bombshells that the street and the stock market won't be able to ignore. Only time will tell, but that's where I'm placing my money. Tesla will have that NVIDIA moment. And when they do, it will no longer be called the NVIDIA moment. It will be called the Tesla moment, specifically the full self-driving moment. Speaking of which, if you'd like to take a look at driving instructor Yoshi-chan's first steps behind the wheel with full self-driving engaged, 11.3.6 mind you, check out the link in the description. Feel free to join Patreon. There will be many exclusive videos. Plus, every time I make a trade, before, during, but most likely after, you'll get fresh updates. Click the link in the description and I'll see you over there. I've got one short-term option in play right now. It is the 207.50 put that expires on June 9th. Currently, as the stock market inches toward the 210 resistance barrier and very well could punch through, this trade will be moot. I have some long-term calls that I do not mind that activity. So let's go ahead and see what influenced my decision to maybe be a little more bearish in the short term while I remain the ultimate bull in the long term. We're talking about 3-4 times Apple's market cap before the end of the decade is my humble opinion. So let's go ahead and check out some of this unusual options activity in Tesla stock. Shows a large investor taking a position. 2 large tranches of Tesla stock options were traded on May 30th. One, a near-term in-the-money put position, and the other a long-term way out of the money call option. Puts typically are of a bearish quality. Calls get a bullish signal. There are variations with calls and puts that can kind of flip and flop and reverse those things. Sound like a Missy Elliott track. Let's continue to read on. This unusual stock options activity is likely from a large investor. The unusual stock options activity from bar chart on May 30th showed that there was 13,039 put options traded at the 202.50 strike price for expiration on June 2nd. That's today. The second tranche was for 13,064 call options traded at the 310 strike price for the expiration on October 20th, 2023, 142 days from now, or right around Q3 earnings. That, my friends, is a lot of calls and puts being placed. Huge tranche. I deal in 1, maybe 2. Like if I'm feeling really froggy, I might purchase 2 call options. But these in one fell swoop purchase 13,000 puts that expire on June 2nd. If these are the same players, you're going to either have the cash covered call or cash covered put and then use the money, the insurance money essentially, to fund the other set of calls and puts. I understand this is confusing as hell because you don't know which one's which. You just know that there's been a significant number of puts put on the market and a significant number of calls on the market. We're talking 13,000 of each. The upfront gains of the covered situation very well could be funding the other put or call. All right, let's continue before we get too lost in the weeds, right? Large calls and puts in Tesla stock. The first tranche of options, puts, was in the money since the price of Tesla closed at 201.16 on Tuesday, May 16th. The second tranche was way out of the money since the 310 call strike price is 54% higher than today's price. But interestingly, both had very similar prices. That's what makes me believe that both tranches were likely initiated together. For example, the puts closed at $5.45 per put contract, and the calls traded at $5.15 per contract. That implies that the investor may have gone long the puts and paid the $5.45 price, even though they only have $1.34 of intrinsic value, i.e. $202.50 compared to $201.16. That's roughly $1.34. The reason is that they shorted the out-of-the-money calls and received $5.15 per call contract. That leaves the net cost of just 30 cents, i.e. $5.45 to $5.15. That's very likely that they shorted the 310, getting upfront money, and then using that to pay for their 202.50 put options and hoping that the stock had an immediate reversal and is not brushing up against that resistance of 210. If indeed this was one investor and this is how it played out. So, in effect, the short put investor has a profit of $1.04 in the long puts, as long as the Tesla stock stays at 201.16 or lower. Meanwhile, they must figure the call options will wither over time unless Tesla stock rises by over 54% over the next 142 days, which is a possibility. Where Tesla stock stands now. Tesla stock is up over 22% so far in May and has risen 63% so far in 2023. Those numbers are significantly higher as Tesla stock is right around 209 right now. Moreover, the company reported on April 19th that Q1 revenue rose 24% year over year compared to last year, although non-GAAP earnings per share fell 22%. Analysts expect earnings per share to rise to $3.50 per share this year and $5.03 next year, up 43.7% by the end of 2024. This puts Tesla stock on a forward multiple of 40 times for 2024, which is not that expensive. Not to mention these expectations, in my opinion, will fall grossly short of what actually happens. And every time I read these expectations, the only sound that plays in my ears is that of the cash register screaming cha-ching. And if you got your universal translator on, that translates to English as opportunity. So theoretically, Tesla stock could rise 54% by October 20th, especially since by then analysts would have received the Q3 earnings report for the quarter ending September 30th. Nevertheless, that could be a reach. In other words, it's possible that the call options could potentially be worth $5.15 by October 20th. Nevertheless, there is a good possibility that Tesla might not be seen as undervalued given how far it has risen this year. That is likely what the investor who likely shorted these deep out-of-the-money calls is counting on. It also shows that the investor is likely more bearish on Tesla stock as they have, in effect, a large in-the-money put position that is mostly paid for by shorting the out-of-the-money calls. So investors who intend to copy these moves should be careful. It's an incredibly bearish play, but nothing that's too concerning given the macroeconomic environment. And if you believe that the economy is headed for a recession, Tesla should also be impacted by that, considering they're making these large manufactured items and highly dependent on vehicle sales. Not a ridiculous bearish play. However, another interpretation. Also keep in mind that my interpretation of these tranches may not be correct. It is possible that the investor went long on these out-of-the-money 310 strike price calls. They may have shorted the in-the-money puts with the hopes that Tesla stock will rise in the next 2 days. That is, they shorted the 202.50 puts, received $5.45 per contract, and then turned around and used those proceeds to purchase 310 strike price calls, paying $5.15 per contract for them. Woo! That is a gamble, my friends. At least that way, the long call position is more than paid for with a net 30-cent credit, i.e. 545 from the short puts, 515 for the long out of the money calls. And even if the 202 strike price puts are exercised, at least then the investor will own Tesla shares at 202.50, less 30 cents net credit. So then they will have a covered call position with the 310 out of the money calls. Either way, you can see that a large investor has taken a big position in Tesla stock, which is mostly bullish. Those are some pretty big risky plays. Regardless of how you feel about Tesla stock, those are huge swaths of puts and calls used in tandem, most likely to fund one another. Hopefully their trade pans out. And before we go, got one more article. Tesla cracked $200 again. Is it time to take profits? Barron's.com. Well, as I record this, I took the profits prematurely, I might add. Mistake on my part, but made some profits. Tesla stock continues to climb higher. Win-win. I'm okay with this. Tesla stock re-pierced the $200 level, leaving investors to wonder if they should take some profits, double down, or do nothing. Oh man, wish I'd have doubled down, but hindsight's 2020. The question isn't so easy to answer. A look into the automaker's stock charts can help. For starters, Tesla is a volatile stock. Buying and selling too much is a bad idea, but profitable trading is possible. How often to trade partially depends on your investment style. Traders buy and sell more often because they are seeking short-term gains. Investors should theoretically hold their positions for a long time. If you sign up to Patreon, you can get my shares tracker and my options tracker, depending on the level that you sign up with. And you can see in real time the decisions that I made with my shares of Tesla and my options. I'm a big fan of holding Tesla shares long term. I don't want to sell any of my Tesla shares. That's what my options contracts are for. They have expiration dates. Depending on how I feel the stock will go in the short term, I can enter and exit Tesla positions via the options contract and leave my Tesla shares alone. Unless there's some strange options activity. More if you sign up to Patreon. But my thesis is just accumulate shares of Tesla, trade the options contracts. The volatility of Tesla makes options trading very dangerous, very hot, if you will. If you can withstand the heat, keep your in the kitchen, you'll be just fine. Both groups can use stock charts or technical analysis to help make decisions. Technical analysis can help in understanding sentiment surrounding a stock, whether it's a little too euphoric or too miserable. Technical analysis is just a history of what the stock has done. It has no bearing on what direction the stock may go in the future. And there is a precedent. Now that algorithms are doing a majority of trading in the stock market, there are more significant patterns involved than when it was just humans. Those that do technical analysis can see some patterns, although it is not an indicator of what will occur in the future. It is good to see how some of these stocks behave with certain news, certain macroeconomic pressures, and you can use that previous data to then make informed decisions about what you should do in the future. There are no guarantees. If there were, there'd be billionaires everywhere, so you gotta taper expectations. Bring on the information, add it to your vast experience and knowledge, and utilize it as a tool instead of as gospel. Optimism is building around Tesla stock. Shares closed at $201.16, the first close above $200 since the end of March. The stock now is overbought again and testing its 200-day moving average. An overbought condition occurs when the stock price rises very fast and very quickly. It's usually measured by the Relative Strength Index, or RSI, which fluctuates between 0 and 100. Reading around 70 or higher is typically considered overbought. Tesla's RSI is around 70 now. As I record this, Tesla's RSI is over 100. But with its volatility, that is an indicator. It's something that you should take on board, not treat as gospel. One thing to watch is Tesla's moving averages, which shows the range shares typically trade around. They can be helpful in understanding how far shares could fall during a sell-off or how high they might go without significant news. Back in February, when shares went from roughly $100 to $210 in about 5 weeks, Tesla stock failed to break its 200-day moving average. There just wasn't enough positive news to get investors to push shares north of that level. Today, Tesla stock is trading above its 200-day moving average of about 195 and its 50-day moving average of about 180. The stock was down 1.1% at 198.97 on Wednesday trading. Holding above the 180 level in a sell-off would be a positive sign for the stock. If the stock can't hold above its 50-day moving average, investors should watch the 140 level. If Tesla were to break below that level, it could bring January lows of about 102 back into play. I personally don't believe Tesla will go beyond the 180 level. I'm not sure if I'd be placing puts at that time. I guess we'll cross those bridges when we get there. Every situation will be different. I use a multitude of indicators. Most importantly of all, my gut. So I'll take all that information on, and based on all the I've made in the past and all the good trades I've made in the past, I'll come to some conclusion, hopefully not an emotional one. As a Tesla bull, I am firmly in the camp that in a decade's time, Tesla is the most valuable company on the planet by an order of magnitude. That's my level of conviction in the company. I can't let that opinion, that conviction, sway my judgment in the short term, whether that be a week, a month, or year, or 2 years, whatever. I have to look at it from a practical sense. First, is it feasible? Second, is there opportunity here? How is the implied volatility in the market? What am I getting? How much do I have to pay for this contract? And can I meet my break-even point? If the implied volatility is in the 80%, 90%, that what I pay for that contract is priced in. I'd rather just buy shares of the stock and wait, depending on which direction I believe the market will go. Either I hold the cash and wait for the sell-off, or I purchase shares of stock if the implied volatility is way too high. I've got my system, and to each his own. Sign up for Patreon. You can see every options position I've entered, and you can see the shares of Tesla that I purchased or sold. That's all I got for you today. Be easy.